invite 1,000+ leaders and create 1,000,000 leaders. Every Wednesday, we come together from 6:30 to 7:15 p.m. IST on Zoom Live to gain insights from top management leaders and the last week of the month from authors. And once every quarter, we take it offline in different cities to network, support, and grow together. Because at Leaders Connect 360, we strongly believe that leaders create more leaders. Before we kickstart the episode, a quick reminder, please keep your videos on for an engaging experience. First-time visitors, check out the WhatsApp, Facebook, and LinkedIn links in the chat box to stay connected and grow with us. This episode is being recorded for our community archives. Now let's set the energy high. If you are excited and ready for an impactful session, drop a thumbs up or a smiley in the chat. Thank you. Thank you, everybody. Fantastic. And before we go, let me introduce our guest speaker, Mr. Ganesan Thiru, author and founder of YMM Financial Service Private Limited. Let me also introduce Mr. Pankaj, managing partner, BIJA Training, who will be interacting with our guest alongside our panel discussion leader, Dr. Ishwarya, 360-degree feedback assessment specialist. So without any further ado, let's get started.
Thank you so much, Priya. Thank you so much. Good evening, everyone. I welcome you all on behalf of BIJA Training, the Mass Leadership and Leaders Connect. Special welcome, Mr. Ganesan Thiru, for accepting our invite and being here today for this author's episode. And we are really happy and excited to have some learning from your book, which is called One Page Mutual Fund Plan. And I believe everyone out here in this room either might be having some knowledge of mutual fund or having no knowledge of mutual fund, but everybody is expecting some knowledge of money, right? And that is what I believe is what is going to be shared by you, Mr. Ganesan Thiru. So even I am equally excited to know the secret where we can make our money work for ourselves instead of we working for money, right? So that's the beauty of mutual fund, they say. So then you being an expert, let's see what is there for us today. So we welcome you. And also I welcome Dr. Ishwarya as a panel discussion leader. So before we move forward, I would like to officially welcome you all through a mode of a official welcome video. So I'll just have the welcome video for you and then we move forward. So just a minute. Welcome, Mr. Ganesan, and welcome, Ishwarya.
Thank you, Pankaj. Thank you so much for your warm welcome. So good evening,
Thank you,
sir.
Mr.
Welcome you
Pankaj.
for the session, sir.
Thank
And
you, Ishwarya.
before
Welcome
entering
and good
into the
evening all.
session,
Yeah.
yes, sir.
Well, yeah,
And our topic is today. Yes, Pankaj.
yeah. You were not audible, so I thought we missed on you. Okay. You can please continue.
Yes, yes. Yes, thank you, Pankaj. Good evening to one and all present here. And our topic is today something we all should know more about mutual funds because I still remember our ancestors used to say earnings is very easy, but the savings of that earnings is quite difficult because when we plan for savings, we used to go for fixed deposits or RD like that. And I think many of them are not aware of this passive income. So we people need to be educated among this about all these mutual funds and SAPs, all those things. And definitely I hope today's session would be great for us to know about the mutual funds because many of them are having a what to say negative impressions on this mutual funds. If you are going for a mutual funds, definitely we'd be facing a loss. So on this note, I'm very happy to invite our author of the day today. Sir, before entering into the session, I want to know what made you to choose this topic, sir, because this topic itself are quite interesting. Sir, I hope I'm audible, sir.
Yes.
Yes,
So thank
yes.
you,
So
Ishwarya.
my
And
first question is, what made you to select this topic and what made you to write on this note?
actually, there is a book called One Page Marketing Plan, and which was very interesting. And am I audible?
Yes, sir,
Okay.
yes, sir.
So
You're
yeah,
audible.
okay. Yeah. So based on that book, I thought let me simplify. Based on that, marketing was made as simple as possible, and it was introduced to me by my coach and my called Murli Sundram, who is a happiness coach. And based on that, I thought, can I write a book on mutual fund stock market so that I can simplify things, which is very complex, or people think it's a very complex topic, Greek and Latin for almost everyone, and that is the reason I thought of writing this book. So I made it as a three part subject so that based on it, once you plan, act on it, and once you act on the plan, automatically freedom will come in the future. So it's a three-part. The book itself is divided into three sections. So that is the reason. And 9 questions I had posted so that it's a one in a one page. I will have 9 questions. Once the people answers those 9 questions, people will be able to understand mutual funds and they can also start investing. So that is the idea.
Oh, that's great, sir. Great. Sir, do you think that this book is for everyone to learn or invest or to get aware of this book, sir?
Yeah, it's completely jargon free. There won't be any jargons, or it's not for people who understand mutual fund. It's for people who don't understand mutual fund and who are beginners. They want to know, or they want to explore, or they haven't known about mutual funds, but they can learn about this mutual fund and take action steps. Because it's very simple, and that is how I have written. And right from the history of when it started in India and how long it has been uh, going on in India, and right now what is the penetration level compared to other countries, and how one can implement in their career. I mean, once the career is started, they start earning. After that, no one teaches how to invest, where to invest, and because everyone's life situation is different. But once they know mutual funds, they can plan things easily based on their monthly income and how they want in the future. And mutual fund is enough for now as well as for the future. Even they can withdraw pension kind of stuff based on it. So that is one thing.
Oh, great, sir. Because I still remember when I was studying my commerce, I was doing my 12th standard. What is mutual fund? Mutual funds is all about investing in various sector. They will give one example. Don't put all the eggs in one basket. Instead of that, you put each eggs in each basket so you can balance the loss. So this is what the major thought process what you got about this mutual funds. But nowadays, I think people are getting aware of this mutual funds, even though we are not feeling so safety of investing in this mutual funds. I hope this book will give definitely a roadmap for us to get into mutual funds field. Yes,
Exactly.
and sir, what will be the three biggest takeaway for the people when they are reading this book or when they are getting into this book, sir?
Uh, One, they need to plan their income, and then once they plan like why they want to invest, they should act on it, like even with a smaller amount. Right now, AMFI, the regulator, has made it as simple as possible, like they can start investing with 100 rupees. Once they start investing with 100 rupees per month on a monthly basis, they surely in the next 6 months to 1 year, they can increase the investment amount. And another thing is once they start acting on the investment, slowly they can plan based on their goals. Freedom is there. So the three biggest takeaways is they should plan their income and what how much they can invest, and then act on it because they know the during the March month they will rush for getting a taxation related products, or they will break their head for how to what to do. But instead, once they start acting on what is your financial goals and what once they start acting on it using mutual funds, financial freedom is quite possible, but it takes time because it doesn't happen overnight. It takes longer time. So these are the three biggest takeaways I would say.
Yes, sir. As you said, it was the biggest takeaway, right? The consistency of doing the thing. Starting a thing is very easy, but when you practice doing it consistently, only you can get a benefit out of this. And in mutual funds also, when they are investing in a consistent way, only they can see the good returns and good values in their investments, right, sir?
Exactly.
Yes. So the next one is can anyone plan their investment in mutual funds after reading this book, sir?
Yeah, definitely. Because as I said, there won't be jargon. From the beginning, they can understand what is a mutual fund structure and how the schemes are formed, what are the different types of mutual funds available in the market, and how India is different from other countries, as well as uh, how to plan their financial goals, like for their kids' education, for their retirement. All these are basics everyone will do. Once the kid is born, they will plan take some policy for their children's education and then for their retirement. So all these things are basic things which they can plan after reading this book, and even the where to start, what are the documents required. All these are covered in this.
Oh, that's great, sir. Great, sir. Sir, why should everyone read this book, sir? Why? What is the basic importance of this mutual funds? Because we all know there is mutual funds. There are a number of people are getting into this mutual funds. See, say in my case itself, I'm from what to say, my ancestors and my father, mother are from government employed. They are from government salaries and they have their own pension. And we doesn't know about that passive income, and we are not patronized in that way as well. So after getting into this field only, we came to know about this passive income and all, and we are just planning to invest in mutual funds. Can you please tell me in an elaborate way what was the importance of this mutual fund, sir? So why it has to be? Do you think that this is very mandatory for everybody to invest in mutual funds? And what is the importance of this mutual fund, sir?
Right question, I will say, because as you said, our parents were working in a government office or they are teachers and they were getting pension even after their retirement, after 60. And they were dependent on their pension and they don't depend on their children. So they live on their own till their death. So, but right now, after 2001, government has imposed a policy that there won't be any pension for even for government employees. So, even government employees need their financial future security, and for private companies, they get massive amount of income, which is incomparable with government employees in their lifetime itself. But still, every year, whatever we earn, we spend, and we don't even think about the retirement also, because after 50 or 60, people in IT or manufacturing jobs or wherever, they don't think much about retirement. They focus fully on building a home or paying EMIs and then spending money on their kids' education. But after 50 only, they start thinking about retirement and what can be done in the next 10 years, which is very difficult, or they need to postpone their retirement option. Once they start investing a smaller amount, even a few thousands, right from 30s or 40s, that can be a bigger amount in the future because that is power of compounding. And one another major reason
Yeah.
comparing with the older generation, the previous generation is that their expenses were very low and they didn't have option of mobile apps like Swiggy or Amazon or Flipkart. They don't spend much on online or they don't go outside they don't go to malls or because that was not available at that time. Right now, right from 2005-10 onwards, malls are opening up every nook and corner, and movies are there, OTTs are there, broadband. all these have become mandatory. Even the lifestyle inflation like TV, AC, fridge, and all, it has become mandatory, which was not mandatory, which is not required at all in 80s and 90s. So right now, our cost of living has increased beyond what is required. So to cope up with all these things, the previous insurance policies, the interest rate has gone down because of RBI's decision of bringing taming along with inflation. So earlier, the interest rate of fixed deposits used to be around 12 to 14%, and right now it is around 6%. And if there is further rate cut, this interest rate will come down. So if the people in our generation right now, if they think that I can save it in fixed deposit or post office or Sukanya Samriddhi scheme, it won't even beat the inflation rate, because inflation is not only what government is saying, the lifestyle inflation, medical inflation, education inflation, all these put together, it is going to be double digit, 9 to 10% and above. So to beat this inflation, you need a product which is safer in the long term and which is not defaulted once you understand and invest. So in that case, for the last 40 plus years, mutual fund has been one of the structured products, highly regulated, and still India's economic growth is for the next 20, 30 years, it is intact and we are going to grow. So once the economy grows, automatically the stock market is going to grow. And once this grows, the money which is being invested through mutual fund is going to be safe and going to grow. For these reasons alone, people can choose mutual funds and they can see and also we can see the past results. How much the fund has performed right from the beginning for the last 30 years, 40 years. There are funds which shows the past history. And even in the future, we have a strong prospect of how the economy is going to grow. So we can expect a moderate level of growth in the future as well. Put together, this is the right time. Everyone can start investing in mutual funds.
Yes, yes, sir. The point what you're telling is exactly right. The power of compounding plays a vital role in this mutual fund. Timing plays a vital role where when we are going to invest, right? Right from starting, now we are investing only. We can reap this when we are in our retirement stages, right, sir? Yes, sir. Yes, you were very clearly in telling about this importance of this mutual funds, and many people are not aware of this mutual funds. Sir. They are having many negative impacts on this mutual funds. Even in my family itself, they have undergone with wrong brokers and they have lost something. And if at all I am starting a mutual fund in my family itself, they won't allow me to invest, right? So I want to know what baby step I can take, sir, because we are all, as I said earlier, we are all not having aware, or we don't know about the subject of investing, all these things, and we are having a strong confidence. If at all I'm investing in fixed deposits, as you said, fixed deposits are RD and everything, we are very much assured of our principal amount. We may get low amount of interest, but we are very much assured of our principal amount. So if at all many people they are just getting into the field of this mutual funds now, what baby step I can take in investing in mutual funds, and what are the awareness measures I have to take in investing in mutual funds, and yes, that was the main thing. What awareness I should have to invest in this?
First of all, they should come with the mindset of investing for at least 4 to 5 years. If you are putting your money in equity, it won't come like fixed deposit. Every year, 6% means it's like a fixed thing, where you will get a return document saying that if you're investing 1 lakh, 6%, and this is the interest you are going to get, this is the maturity amount every year, and it can get auto renewed. But in mutual funds and equity is one of the options. There is an option like debt, which is like a fixed deposit, and there are options like hybrid. So multiple options are there to invest. They need to understand. And if you're investing for long term for 5 years, they can see a good returns of at least 14-15% in 4 to 5 years time, not immediately or every year. And instead of choosing so many things, they can choose to invest in Nifty 50, the top 50 companies in India, which is available as an index, and or they can invest in NSE 500, or which is a top 500 companies in India, again listed in stock market. So this is highly diversified. If these 500 companies grow, automatically your fund will also grow. So the point is, you are going to invest in top 50 companies in India, or choose top 500 companies in India, which is highly diversified, so that once the economy grows, this is going to grow. Companies are going to grow, then only economy will grow. If India is going to grow, automatically it's like vice versa. So once this happens, automatically your fund will also keep growing. So take a conservative approach of 12%. I'm not even saying 15. This 12%, if it keeps growing every year, and it's not like every year 12%. People will have a question like, will I get 12% or 14% every year? None of the companies provide a written document saying that this is the percentage you will get. Based on the past data and based on how the India is growing, uh, it's a general consensus that benchmark last 15, 20 years, 30 years benchmark is this Nifty 50 or Nifty 500 will grow at 13% or 14%. Looking into that, we can expect market will grow over a period of 4 to 5 years. You will get a 14-15% return. And 1 year you may get 20%. Next year, second year you may get 5%. In third year you may get minus 2%. Last 1 year returns for everyone's idea is that 0%. Nifty 50 has given just 0% last September till this September. But previous 4 years, market has given at least 15-16% returns in Nifty 50 itself. So this is stock market. So that is the reason I told you, come with a mindset of 14-15%. Come with a mindset of minimum 4 to 5 years. Then you can expect at least 14-15% return. And this is very
Yes.
basic. They can invest on their own. There are so many mobile apps. And if still, if people are having doubts, they can reach out to a distributor or financial advisor. Just like a doctor, if you're not good, we will always go to a doctor and ask what happened. And he will give some medicine. And then if still there is an issue, he will rectify or he will find out what is the problem. Similarly, go to a financial advisor. He will tell you what needs to be done for your life. You can ask whatever questions you have. And that is like a final step. Instead of doing it yourself and making mistakes and seeing whether it will work or not, this can also be done.
Yes, sir. Sir, yes, that was very clear, sir. And what are the, yes, again, any clear points that has to be awareness measures, like many mutual fund investors, many mutual fund companies are there, and many of them, many of them are approaching us to invest in mutual funds. What has to be noticed initially, if at all I am very new to this mutual fund company, what I have to notice, sir? What precautions I have to take?
As I said, there are 47 companies and all of them will have Nifty 50 index fund or NSE 500 index fund. So even if somebody is coming up and if you go to a bank and ask for mutual fund, they will always give you a ULIP policy, which the terms and conditions are almost similar to mutual fund. But they will tell you invest for 5 years and then you can redeem it at any point of time. So if you go to a mutual fund, either go to CAMS office or Carvi or download Grow or Upstock or Coin by Zerodha. These are online apps. And once you download, register your KYC, they will ask you the steps to take. And then you can choose Nifty 50 index from UTI or Axis or HDFC. All the banks will have a mutual fund company by their same name, HDFC, ICICI, Axis, UTI. All these companies will have the same scheme names. So choose HDFC Nifty 50 index fund and or Axis Nifty 50 index fund. The returns are going to be same because they are going to invest in the same Nifty 50 stock. And if the Nifty 50 stock is going to grow, this fund will also grow. And Axis and UTI, only the fund name is going to change, but the complete portfolio is going to change. And based on the certain factors, there might be the return difference of 0.5 to 1%, not more than that. So if you are a beginner and if you want to do it everything by yourself, go to any of the apps like Grow, as I said, Coin by Zerodha, whichever you are comfortable. Do the KYC, which is very simple. Your PAN, Aadhaar, and you should be having your checklist, bank details. And once this is done, choose this Nifty 50 index fund as a beginner, and then you can start investing. And after all these things, if you still have doubts, you can always reach out to a distributor or a advisor after that.
So thank you so much, sir. Really, your thoughts were so insightful for us today. And as you said, the power of compounding is very important in this mutual funds. And that was the biggest positive thing we can see in this mutual fund. And when we are going to invest, right now is the correct time to invest. As you said, thank you so much for your valuable insights, sir. It has made us, it was a bit of seed for us to invest in mutual funds. I hope your book will also give our drastic information about this mutual funds. Thank you so much for sharing your valuable insight with us, sir. Yes, thank you, sir. Is the Pankaj,
Thank
the
you.
session is over
Thank you,
to you.
Ishwarya. Thank you for having a wonderful panel discussion. And Mr. Ganesan, thanks for sharing wonderful insights. And yes, the power of compounding really makes sense. And the kind of apprehension what Ishwarya has shown, I believe most of the people do have that. Now, over the last couple of years, post COVID, I say that there's a paradigm shift which has come, but still there's a long way to go. That's what I feel, right? And as rightly put up
Absolutely.
by you, sir, an average of 14-15%, I mean, it's a decent one. And people expect much more, right? Even before investing, they think that they should be getting double of it, right? But the power of compounding, if they understand, I believe not less than, no, I mean, just in 3 or 4 years, it becomes double the money what we invest, right? But that should be done. And there are various, what we say, specialist people are there available. There are many more, information which is very available. And I believe we should be able to start saving now, right? That is where this traditional savings will not help. The FDs will not help, right? Because over the period, the value of money is also deteriorating day by day, right? So we also need to
Yes.
work on that. The money should work and it should be able to sustain its value, right? That is what my understanding personally, it had been what I have understood in the last couple of years. So I believe each one of us who are here, who everyone is working for money, but we should also understand how the money can work for us, right? And that is where this SIPs are really good to work on. The mutual funds are really good to work on. And I also second the thought shared by Mr. Ganeshan. So we all here, I would request each one of us to, gather some or the another good information about mutual funds, and we should start small, right? And that is where it will bring some values. So that's my understanding, my takeaway, sir. Thank you so much. Anyone from the group who would like to ask question to our guest, please feel free. We can have some 2-3 questions so that people can have
Yeah.
more better insights. So please feel free to unmute yourself and ask question to our guest, Mr. Ganesan Thiru, and then we move forward. The forum is open. So please raise your hand, and anyone who would like to ask question, please ask the question. Yeah, Priya, please go ahead. Yes, Priya, you can ask the
Please
question.
unmute. Unmute.
Unmute
Please unmute.
yourself, Priya.
Yeah. Yes. Thank you. Thank you very much, sir. What is your idea behind this name, One Page Mutual Fund? Because the instruction itself goes many pages.
See, mostly people will get fear based on the last point of the ads of the mutual fund. Mutual fund is subject to market risk. I'm saying it slowly, but you will get it in a 30 second. It will run like 2 minutes audio. So instead of thinking too much about the risk factors, because AMFI and regulatory body wants to highlight that, but you can understand that risk comes down over a period of time. If you think you will make double the money in 1 year, that is a risk factor. So these 9 questions, based on the book, as I said, one-page marketing plan. It was a precise one-page marketing plan where 9 questions were asked, and based on that, we will then have our marketing idea and what needs to be done for our business. So reading that book, I got an idea like why can't I can make it like similar to mutual fund and financial planning and stock market. So in plan section, I will have 3 questions where people can get an idea of once they read the question, and if they understood what is mutual fund, they will write the answer. And similarly for acting on it, what needs to be done. If these 9 questions will not give you scheme names or whatever, but once you get confidence about investing in mutual fund, the final step is the scheme names, which is very simple. The index fund is more than enough. And once you understand what is index fund, what is active fund, all these stuff by reading this book, you will automatically go and invest. You don't need to, if you want to do it everything by yourself, it's a do it yourself book, I will say, because index funds, all these are terminologies looks like a jargon as I say right now, but once they read through it, once they understand, it takes time. Maybe once they complete the book or once they understand by reading a blog or so, anyone can go and invest in index fund. It's very as simple because investing in top 50 companies, as I said, it's like you can't doubt Reliance, which is the number one company. You can't doubt TCS, which is the number two company. So if that company is going to default, it's like next year is going to default, which will not happen. So once you understand what is index and once you have the confidence about these top 50 companies, you will invest on your own. That is how this one page mutual fund plan Actually, it's a 9 questions which I put it up in a 3 section. Once they write it down, it becomes very fun.
Thank you, sir.
Thank you, thank you. So I believe we have Mr. Vinay would like to ask a question. Vinayji, please unmute yourself and you can ask the question.
Thank you very much. So, what is the right time to exit? Because, see, I have started investing in one mutual fund in 2000, July 2000 from July 2016, and the amount is 3,000 rupees SIP every month, and now it has grown approximately 7 to 8 lakhs. But still, I don't feel that I need it. The 3,000 is going in that fund, and it is still growing. So, what? And now I'm 53, 52-year old. Now, what is the right time? When should I withdraw it, or whether I should withdraw or let it grow?
You can let it grow because now even if you withdraw, where you will invest? Again, you need to choose the right product which is needed for your current situation. And right now, you're, as you said, 50 to 53. In the next 5, 6 years, this 8 lakh can become 15, 15 lakhs also because 7, 8 years, market will double automatically. Your current value will also double. And generally, for people asking about when to exit in mutual fund, start investing based on your financial goal. Right now, for Mr. Vinay, it's like for his retirement planning, he can use this money. And if you are in your 30s and if you are kids, based on his yearly education, you can start investing in debt mutual fund. And if you are for their higher education and when they go to college, like by the time of 18, for the next 15 or 14 or 10 years, they can start investing so that for their college education, you will have a right amount of money. Similarly for their marriage, similarly for your retirement. If from 30 till next 60, 30 years are there. So even if you start with minimum 5,000 or 10,000, that it will be a bigger corpus which you won't even imagine, which runs into crores, and that should be more than enough for your next 20, 30 years after 60, I'm saying. And you can even pass on this wealth to your next generation. Financial asset, passing a financial asset to your next generation, if at all you want.
Thank you so much, sir. So we will leave Miss Rashmi. Welcome. So Rashmi
Hi.
ji, you can unmute yourself and ask your question, please.
Yeah, thank you, Pankaj. It was an interesting discussion. My question is that what is the percentage of mid-cap funds and big companies that we should have? Uh, I don't know. Does it depend upon the risk? And how should I look at the mutual fund? What companies they are investing in, and how do I study? Or do I depend on the broker? Do I depend on the person who is suggesting me the mutual fund?
See, if you have lots of doubts, better to go with the advisor where he will do all these work and he will suggest funds where you can invest. You can ask the question. If you want to do it by yourself, go with mid-cap index fund where the mid-cap index itself will have 150 companies and any mutual fund company which has mid-cap index, they will invest in these 150 companies in the same ratio. So you don't even need to worry. You can learn what is the mid-cap index stocks in the mid-cap index, and these companies are top 150. I mean, right from first 100 companies are large cap, from 101 to 250 it's a mid cap, 101 to 250, so 150 companies. These 150 companies, the numbers may change every 6 months or based on the stock exchange. So these companies' performance, if something is worsening or if there is any issue, automatically the company market value will erode. So from 250 it may go to 260 and some other company will come into 250. So you don't need to worry or you don't need to check every now and then or even on a quarterly basis. So you can by far invest and check. If it is an index, you don't even need to compare with the peers because if HDFC Midcap Index is performing like giving 10%, UTI Midcap Index is also will give 9.5 to 10.5, not more than that or not very less. So by this way, you can minimum and risk factor you can reduce by staying long. If it is a mid-cap, stay for at least 5, 6 years so that you will see good return. From COVID, market has given so much returns for the next 3, 4 years. But generally, if it's a mid cap, stay invested for at least 5, 6 years. If it is small cap, more than 7 years, and 10 years average of mid or small or any fund will be more than 50. So we don't need to worry a lot if you are staying longer.
Thank you so much. That was really useful, sir. Thank you.
Thank you.
Thank you so much. So we have the last question coming in by Mr. Amarnath. So that's the last question for the day. And rest, you can get in touch with our guest. So through LinkedIn. So uh, over to
Hi,
you,
Amarnath.
Amarnath ji. You can ask your question. Unmute yourself, Mr. Amar.
Yeah.
Hello, this
Yeah,
is Amarnath Hari,
yeah,
Yes, sir.
and I have recently converted my mutual funds into exchange traded funds. Do you think I made a good move?
ETF is one of the options. If you are looking at lower cost alone, yes, it is good. And just like index, ETF is also going to track the same index. And as it is a ETF, the cost is going to be much lesser. In that aspect, it is good. And if if you let me know the complete portfolio, I can say, because between active mutual fund and ETF or index, there may be 3-4% or maximum 2-3% difference. And if it is okay for you to stay invested in ETF, then it is fine. No issue.
Because as I have understood from my reading that mutual funds have a regular cost of being invested in them. There is a regular trickle of revenue going to your advisor, unknowns to you, and mutual fund is not, even after taking their cut or commission at the beginning of the investment, I think they are continuing to do it every year. But if you are in an ETF, an exchange traded fund, my conclusion or my understanding was that you're not paying anything to the mutual fund house or the mutual fund advisor. And my bad experience has been that my mutual fund advisor has been moving my funds from here to there. I think, and this is speculation only, that my mutual fund advisor has been playing more to the fund houses than to me, the investor or the owner of the money. I felt cheated in that way. I don't have direct concrete proof, but I've got a strong feeling that wherever the mutual fund house needs more funds, they're working through these agents to transfer their clients' funds to this in any particular direction.
Uh, ETF index has a lower cost, and ETF is having one of the lowest cost across schemes. So in that way, if you invest, it's okay. And this point, what you made, mostly said in blogs and other things. If you are a do-it-yourself investor, it is fine. You can go ahead. And if people need the guidance or anything, they need to go to a distributor or they need to go to an advisor. Because not all the advisors or distributors are going to cheat or going to go against the investor's need, because it's going to be a long-term relationship. Only then distributor or advisor is going to make money. And the cost of distributor, what you are going to pay is just 0.5%. Even if you go to advisor, he's not going to get commission, but he will charge you 1% or a fixed cost every year. So the amount what you're going to pay to advisor or distributor is going to be same, more or less. Only for the do-it-yourself investor who chooses ETF or index fund, that there is not go, there is no cost involved in paying the fees or a commission. So that is the only difference. So the decision what you make, if you are a do-it-yourself investor, that is what I understand. You can choose to invest in ETF or index by yourself.
Sir, as I have understood, there are two types of schemes. One is a regular scheme where the mutual fund agent is getting an annual commission, and there is a direct
Yes.
scheme where the investor will invest directly with the mutual fund, and in this the returns are higher.
Yes. Yes. Distributor, see, if distributor is guiding you and doing KYC and all these stuff, they can only recommend regular funds. That is the reason distributor would have given you regular. And direct is for people who are going to a registered investment advisor, where he will charge a fee and then recommend the same thing and in a direct scheme. And third option is do-it-yourself investor, where he doesn't go to a distributor or advisor, where he does all the groundwork, where he does all the research and everything, and he chooses to invest in a direct fund. So these are the three options. If you go to a distributor, regular mode. If you go to advisor, you will pay your fees and invest through direct mode. Or if you are investing by yourself, you will invest in a direct mode.
Thank you, sir.
Thank you.
Thank you so much, sir. So here we come to the last stage for the day. I would like to invite Ms. Jaya Devi for the vote of thanks. So over to you, Jaya, for the vote of thanks, please.
Thank you, sir. Thank you so much for the warm invite. And thank you, sir, Mr. Thiru Ganesan, sir. It's a wonderful session. Today we had a crystal clear idea about the mutual fund. And in Tamil sayings, "Sirutuli veru perivellam," the little drops makes a mighty ocean. Kind of things we learned from your session today. So no long as so I quickly share with our getting very clarity on financial planning and investment before we begin our journey plays a vital role on building wealth and security. I'm very curious about reading your books, and I'm waiting to buy that. And let me quickly share again the purpose of the thriving leadership community. Leaders Connect 360 Foundation is a non-profit organization aligned with the United Nations Sustainable Development Goals, and we are hybrid model leadership community, bringing together leaders every Wednesday from 6:30 p.m. to 7:15 p.m. We're experts in the field, provide solution and the real-time leaders challenges. And every last week beyond the month, we take a deeper dive into knowledge by inviting authors to share insights from their books, helping us grow leaders and lifelong learners. And today we had a privilege of learning from our author of the month, Mr. Ganesan Thiru, through his insight book, One Page Mutual Fund, his practical wisdom and simplified approach to financial planning, and gave such actionable steps to manage investments and better and build a strong financial structure. So we have a heartfelt thanks to you, our esteemed author, of sharing his invaluable insights, and also a dynamic moderator, Mr. Pankaj sir, leading such an enriching conversation today. Thank you all once again. And now, yeah, as a small token of appreciation, is presenting a special thank you video, express our gratitude. See you next week. Until, keep leading and keep growing. Thank you.
Thank you so much, everyone. Thank you, Mr. Ganesan. And we would love you to be a part of this community. Please be there and help us. And we would also like everyone to connect with Mr. Thiru Ganesan on his LinkedIn. And we look forward to have more insights from you, sir. Thank you so much. Thank you, everyone, for being here. Thank you, Jaya, for the word of thanks. Sir, anything you would like to add in the last? That is okay.
Not much. If there are any questions, I can answer. Or thanks for the opportunity to everyone, and thank you, Pankaj, Priya, Jay Devi, and Ishwarya for moderating. Thank you, everyone.
Thank you so much, sir. Have a good day. Arul, are you there?
Oh, thanks, Pankaj. We'll close this. Thank you.
Okay. Thank you so much, everyone. We'll meet next week again. Thank you so much. Arul will share the details. Thank you so much. Good day. Bye bye.
Thank you all. Thank you. Thank you, guys. Thank you.